Whether you like it or not, the US dollar currently controls the world. Because of the Bretton Woods Agreement in 1944 and the petrodollar arrangement, every currency in the world today is linked to the dollar. And this means the Federal Reserve is actually the central bank of the world. If the Fed hikes rates, other central banks have no choice but to react and make a choice. Do they also hike rates and risk slowing down their economy, or do nothing and watch their local currency depreciate? That is the dark side of being under the control of the world reserve currency. Every country today needs dollars to buy stuff, and it doesn't matter whether it's oil, gas, gold, wheat, or even electronic gadgets. The majority of goods and services are priced in US dollars. In fact, except for Europe, over 70% of the world's transactions are done in dollars. Now, whether you're in China, Singapore, Mexico, or Canada, if you want to import stuff, you better have US dollars ready. So being forced to pay in dollars for commodities and goods is the first stranglehold the dollar has over the world. But that's just one side of the coin. On the other side, we have the world borrowing money in US dollars. We can see that over 60% of the world's foreign currency debt are denominated in dollars. And that means a foreign bank or business issues bonds that are denominated in dollars and not their own local currency. This keeps the dollar propped up because this drives demand for it. Now, investors need dollars to buy the debt, and the bond issuers eventually need more dollars to pay back the loan. And this is why we are seeing countries like Sri Lanka default on their debt for the first time in history. Sri Lanka just can't print Sri Lankan rupees to pay off their debts because the debt and the interest payments are denominated in US dollars. But it's not just Sri Lanka, folks. There's around $250 billion worth of debt that's about to implode across emerging markets. We are talking about countries like Pakistan, Tunisia, and Egypt. The poorest countries in the world have taken a lot of variable rate debt, and when interest rates go up, a ton of countries are going to default. And when these countries default, they will be forced to take a loan from the IMF, which will impose harsh conditions that have been criticized. Now, this includes high interest rates and the privatization of local enterprises, policies that could devastate the local populations and just cripple their growth, forever trapping them as an emerging market. Now, this can't go on forever. Countries are realizing that the dollar system benefits the United States the most at their expense. So let me put this simply. The world is addicted to dollars, but this addiction is slowly dying off, and it's because of two global events that have woken up every single country. There are two enormous risks to holding the US dollar: American monetary policy and the threat of US sanctions. Now, the first event was the money printing in 2020 during the lockdowns. The Federal Reserve decided to print $5 trillion and increase its balance sheet to almost $9 trillion in just 2 years. Now, this increased the money supply, and now the world is seeing the devastating effects of out-of-control money printing. Since 2020, inflation has been on a non-stop rise month after month, from less than 2% to over 9% in June. In fact, even before the Russian invasion in February, inflation was already 7.5% in January. Yes, the Russia-Ukraine conflict is causing serious supply issues that are causing inflation to stay elevated, but this does not discount the mismanagement of the dollar by the Federal Reserve. And when countries are affected by US monetary policies, when the Fed eases and prints tons of money, it devalues their own dollar reserves. Big exporting countries like Germany and Japan will also have to devalue their currencies, or their exports and businesses will suffer. Now, the second event was when the United States and the West decided to freeze Russian foreign reserves and prevented them from using their own dollars. Over $300 billion of Russian assets were sanctioned, and they couldn't use the SWIFT system. The US government even blocked Russia from using their remaining dollars from paying their bondholders and pushed them towards default. So essentially, Russia's dollar holdings were as good as monopoly money. They could not use their US dollars anymore to trade with the West. It was as good as useless. So if the US sanctions a country, they can effectively cut them off from the modern financial system, and they are screwed. There's no point holding dollars when you can't use them. And countries are beginning to realize that having too many dollars is like having a hot potato. Somehow you're going to be screwed in the future. And this is why a monetary reset is already happening. A lot of events are stacking up over the last 6 months, and it's all pointing towards de-dollarization. China's dumping their US treasuries, going under $1 trillion, the lowest in 12 years. And even Israel, a US ally, is reducing their dollar holdings for the Chinese yuan. They are dumping dollars for the yuan. The dollar is losing ground as a reserve currency. In fact, it is less than 60% of central bank reserves today. But what is the end game? What type of currency reset are we facing? Because the current situation can't go on forever. Now, when we say a monetary reset, we imagine a bunch of world leaders led by the IMF sitting around a table and coming up with a one world currency. The new world order dollar, the one currency to control them all, like Lord of the Rings. Well, that might be the end game, I have no idea. But I believe, at least for now, we are moving towards a multipolar world with multiple reserve currencies. Even Jerome Powell is on the record saying it is possible to have more than one major reserve currency. We also have Tommaso from the IMF saying a world with more than one reserve currency is a more stable world. So how is this going to be set up? I believe there's going to be a battle between two currency systems. The reserve currencies will be split into two groups. The dollar and the euro will be on one side, and the BRICS currencies like the yuan will be on the other. It will be the established order versus the challengers, which represent commodity money. And this is where things get really interesting. As Zoltan Poza of Credit Suisse mentioned, we are witnessing the birth of Bretton Woods III, a new monetary order centered around commodity-based currencies in the East that will likely weaken the euro-dollar system. The dollar and the euro represents the matrix. It is the network where the majority of transactions are being done. The power of the establishment lies in the existing dominance and a world that's so interlinked to the dollar system. Now, the BRICS currencies, specifically Russia and China, represent real tangible value. We are talking about valuable commodities like gold, silver, oil, and wheat, tangible things that the world needs to survive and function. We are also talking about the production of real goods that are exported across the world. Now, the Great Monetary Reset, I believe, is an ongoing process, not a one-time event. This is a battle between the intangible and the tangible. Now, a lot of people love to say that the dollar is dying and about to vanish tomorrow, but it won't be that easy to dethrone the world reserve currency. We need to understand that the dollar had a head start of almost 80 years since Bretton Woods, and it will take time for de-dollarization to happen. It won't be an overnight affair. Now, the key advantage the dollar system has over any other currency is the network effect it has built. It's like someone asking you to create your own social media site from scratch in order to challenge Facebook or Instagram. And why would anyone use your new platform when none of their friends are on it? And the establishment knows this. They have two powerful networks, the SWIFT system and the stock market. Now, SWIFT is a global money messaging system between banks, and in 2021, more than 11,000 member institutions sent over 42 million messages or transactions. Now, compare that to Russia's SPFS system, which is the SWIFT alternative. There are only 400 institutions registered, and most of them are Russian banks. And the US controls the world's biggest capital markets. The New York Stock Exchange and the Nasdaq are home to almost $45 trillion in market cap, while the combination of Russia and China's stock market is less than $20 trillion. And this is why central banks and people still hold the US dollar. It is to access the matrix and the established network. It is impossible to build such a network overnight. It will take years and even decades. And that's why we are seeing the Federal Reserve researching so much into CBDCs. It is an attempt to maintain control. Jerome Powell even stated a US CBDC could also potentially help maintain the dollar's international standing. And once this economic crisis is over, once this war is over, the Federal Reserve is going to push ahead with the digital dollar. They even have a code name for it. It's called Project Hamilton. It's going to come sooner or later. Plus, we have the SWIFT system experimenting using CBDCs for cross-border payments. Remember that the SWIFT system is overseen by a group of central banks that includes the Federal Reserve, the ECB, the Bank of England, and other European banks. It is an institution of the West. And this is a move to quickly develop a new digital network to strengthen the existing established order, which is honestly a smart move. They are increasing the intangibles of the dollar system, and the hope is to entice the world to stick with the establishment, even though their crazy monetary policies and money printing is causing the inflation hell we are seeing today. Now, obviously, the BRICS are far behind when it comes to the network effect. We can see the Chinese yuan alone accounts for less than 3% of global reserve currencies held. But things are changing. The yuan market share has hit 3.2% of global transactions, and that will only continue to grow. Plus, we are beginning to see countries like Egypt beginning to issue yuan-denominated bonds instead of US dollar-denominated debt. Sure, $500 million is nothing, but this is a sign, guys, that countries are starting to get more comfortable with the yuan as a reserve currency. And in order to challenge the dollar and the established order, Russia and China are playing to their advantage. They are using their enormous stockpiles of commodities. And take Russia for example. They are the world's third biggest oil producer and the largest exporter of oil products. In fact, Russia controls so much energy and the world is so dependent on them that the absence of Russian gas is pushing Europe to the brink of a recession. And as Sergei Vakulenko, the former strategist at Gazprom, pointed out, nobody's brave enough to embargo 7.5 million barrels a day of Russian oil. Like China, they are also a top producer of gold, the monetary metal that could be used to eventually back up their currency. But let's talk about China for a bit. Now, if Russia is the world's gas station, then China is the world's factory. They manufacture products for the world. From consumer electronics to the furniture we buy, almost everything we have is probably made in China. In fact, China exported over $3.3 trillion worth of goods in 2021. That's almost twice as much value as the United States. So what we have is an eventual collision of two currency systems, the dollar system and the commodity currency system coming together, clashing together. And right now, the BRICS countries are trying to win over countries step by step. One of the key ways they are doing this is by setting up their own gold exchanges. Russia, for example, is setting up their own gold exchange and the Moscow Gold Standard. They want to create an alternative to the current LBMA exchange in London and the COMEX in New York. So they plan to fix the prices of precious metals in the new reserve currency, and this will help facilitate the true price discovery of gold and to get the new currency to circulate around the world. Because if traders want to buy or sell gold in Russia, they need to transact in the new currency. And if countries can purchase Russian commodities, oil, gas, and wheat at a discount using this new currency, this could be a game changer, guys. Countries will see a real tangible use for the new currency and might choose to stockpile it more versus the dollar. And this is going to be a titanic battle between intangible money backed up by the establishment and tangible money backed up by commodities. And this is going to be the most exciting and unstable time to be living in. We are literally seeing the changing of the world order. Now, I believe this process will take years and we'll see a lot of maneuvering from both the United States and the BRICS nations. The Russia-Ukraine conflict isn't even over yet and we can see both sides already making moves on the chessboard. And I believe central banks all over the world are going to hedge their bets going forward. They want to make sure that they have some upside on the table in case the BRICS currency becomes a major reserve currency. But at the same time, they don't want to piss off the United States, which is at the pole position by a huge margin. And I believe to do this, central banks will flock to gold and stockpile it as a neutral reserve asset. They have been the net buyers of gold in 2022 and they're still accumulating more month after month. Now, gold has three essential criteria in today's modern financial world. It is a proven store of value, it removes counterparty risk from potential sanctions, and if the commodity currencies win more market share, the upside for gold will be huge thanks to true price discovery. Now the ground is shifting under our feet. The very definition of money is being challenged and the crazy inflation we are experiencing is waking everyone up. And understanding this great monetary reset is important because there's going to be a lot of instability and chaos but opportunity as well. So let me know what you think. Will there be multiple reserve currencies? Are we going to see the rise of new money backed by commodities? Let me know in the comments below. Stay safe. Be sure to smash the like button and subscribe as we navigate through these crazy times.